Good morning and a warm welcome to everyone from Team Global Insurance Brokers led by Chairman Mr. Prabhu Thakur. I'm Rashmi Iyer, the Principal Officer and Director of Global. Let me put forth the context of our gathering today. The obvious reason is the situation we are faced with. There is a disruption which seems to have changed and continues to change the way businesses were being run. Disruption can be because of a variety of reasons. It can be of varying dimensions or so. In the recent past, let's think 9/11, 2008 economic meltdown, events which we believed were the most disruptive. The reality of life is that there is no dearth of challenges. Let us accept this fact, so be it. On a positive note, humankind is blessed with extraordinary intelligence and capable of surmounting all these challenges. The stepping stone of overcoming a problem is to understand, deliberate, and do 360-degree analysis of the issues involved before we find a solution. As seasoned professionals running successful businesses, it would be your practice, and I need not stress on this. The legal outcome of this surprise will be for all buyers as well as sellers. No one had foreseen this situation while signing the contracts. WHO has declared this as a pandemic. Gazette notifications on force majeure have been notified. We as insurance brokers, having the background of risk and insurance, along with the expertise of Khaitan and Company, one of the leading law firms of India, would like to raise the pertinent issues and give focused attention to them. A very quick intro on Global Brokers. We are one of the most respected and leading insurance consultancy firms in India. We have a legacy of 45 years, during which we have had international collaborations with top-class entities. We serve 2,500 corporates from our 15 branches through our 450 plus qualified globalites. We are today positioned to serve all the requirements of corporate India anywhere in the world through our 20 specialities and partnership with the most technically capable partners and platforms. We are the only broker to receive Lloyd's registration facilitated by Lloyd's of India. We are also a member of Worldwide Brokers Network. We have served all the visible brands in India across all sectors in one or the other form with respect to insurance. And we have many firsts to our credit in the industry, like settling non-damage business interruption, settling terrorism claim with consequential losses, and settling the first cyber claim as well. Global is technologically positioned well above the market, and this is widely appreciated in the current situation. Our BCP is heavily reliant on these advanced technological solutions and our trained colleagues. Our in-house developed platform, Global Policy Servicing, GPS, has provided administrative ease, required transparency, non-compromising integrity, and efficiency to our customers. We are uniquely positioned among our peers with our privacy standards to make sure that our customers' data is handled with highest care. We are ISO 27001 certified, GDPR complied, and DFS NY standards adapted. Our spotless track record has been maintained following our growth with governance principle. Our growth is ingrained in our customers' growth, and we are always at the forefront to deliver value to our customers and rise to the occasion. I now hand over the baton to Neha from Khaitan and Company to introduce her firm. Thank you.
Thank you, Rashmi, for that. Good morning, the global team. This is Neha Karande here, and I'm a director with the strategy group at Khaitan and Co. I would thank Rashmi for that introduction that gave us a lot of insight into global as well, and we are really proud to be associated with you. Like Rashmi mentioned, we've gathered here today on this webinar to really think through what we can do and what the points we should bear in mind from a legal perspective in this unprecedented era of the COVID-19. And we are really delighted to have our in-house experts talk to you about various topics impacting various businesses in these times. Having said that, what we are planning to do is cover this call in the next 70 to 75 minutes, and you would be having an option of a question box on your screens. We would like to take questions from the audience participants as and when they think about it. We are going to try and answer each question that is posed to our panelists. We will also try to respond to your email in the event we run short of time. Please also be appreciative of the fact that all our panelists have remotely logged into this webinar, and in the event there are any technical glitches, we are going to really try hard that we don't face any of those. But in the event there is something, we will try and move on to the next speaker, and we'll come back to the speaker who left us once he's back with us again. With that, let me take you through what our day-to-day looks like. If we could just move to the next slide. So we're going to be talking about the fallout of the industry due to due to this whole shutdown that has happened, and the topics we would cover today would revolve around four main themes. The first one being contracts, and we'll try to cover the force majeure and the real estate issues there. The next we will be talking about is on the employee front. This becomes a key issue in today's time and age as to how do we deal with employees not being able to come to work? How do we deal with situations of work from home? How are employers to view the situation so that employees are least impacted or impacted in a way that is not really stressful on them? So, our in-house expert will be covering all these issues. The next, we'll move on to our financing issues in current times, debt servicing issues, the RBI guidelines that have come forth. So we will be talking you through those. And last but not least, we will also talk about the corporate governance theme and what and how should companies today be looking at this. Can we move on to the next slide where I could please introduce today's keynote speakers? Thank you. So to begin with, we'll have our partner from the dispute resolution practice, Kingshuk Banerjee. He will give us an insight into the force majeure clauses, situations, Section 56, and everything that an organization needs to think about from this perspective. Next, we'll move on to Harsh Parekh, who's a partner with the real estate practice, and Harsh will talk us through all the leases, rentals, agreements, everything that one needs to think about from a real estate perspective. We will then have Anshul Prakash, who will join us, and he's a partner from the Employment, Labor and Benefits practice of KCO, and he'll talk you through the employment laws. Siddharth Srivastav, who's a partner with the Banking and Finance practice at Khaitan, will then be talking to the group on debt financing issues. And last but not least, Abhimanyu Bhattacharya, partner with Capital Market Securities Regulation, will talk us through the investment agreements and the corporate governance issues that companies are facing today and what we should think about them. With that, I will now hand over the baton to Kingshuk, who will talk us through the first topic on force majeure. Kingshuk, over to you, please.
Thank you, Neha. Thank you, everybody. So as Neha mentioned, I will give a very general and broad overview of force majeure clauses and the doctrine of frustration in the prevailing context. Force majeure, I think over the past few weeks, we've been inundated with queries on force majeure clauses, claims, notices, and really there is obviously some confusion around how one should invoke or deal with the force majeure situation. And that's really what we will try and address today, give you a very practical perspective. Force majeure refers really to a clause in your contract, which in many ways is an out. Generally speaking, you're expected to perform your obligation under the contract come what may. But in the scenario that we are in today, the question that clients ask is there anything that we can do to avoid performance? Because genuinely performance has become difficult. It's almost impossible. And really, can we do anything? And that's really where a force majeure clause comes into play. Broadly, there are two standards. So there is the force majeure, which is the contractual standard, and that would depend on the language in your contract. And then there is the statutory standard, which is a much higher sort of standard, a much higher threshold, which is the doctrine of frustration that you will find in the Contract Act. Broadly, these are the two standards. I will talk about both briefly later on. Some other factors that I will talk about are the as I mentioned, the high threshold, the pros and cons of invoking force majeure clauses, some guidelines on how to really invoke force majeure clauses, and finally the consequences of invocation of force majeure clauses. Uh, as I said, we've been receiving a lot of questions, and really one question that the clients ask is how best do we address or really deal with a situation like this? Is there any systematic way of approaching it? Can we have the next slide, please? So my recommendation is that we simplify things and we ask ourselves four questions. First one being, does my contract have a force majeure clause? Because if your contract does not have a force majeure clause, really, then there is no question of making a force majeure claim. You may perhaps have recourse to Section 56, but as I said, the threshold is very high and it may be difficult, but we'll come to that. So first question, most important one, does my contract have a force majeure clause? If your contract does have a force majeure clause, the next question that we need to ask ourselves is, does my definition of force majeure in the contract include a pandemic, epidemic, government action, or order? That makes it easier to address the situation, because if it doesn't, then we have to analyze the definition and see whether one can interpret the definition to have these events included. Next question, and I think the most important one, is does the force majeure event directly prevent or prohibit my performance? So does it really impact my performance? You may have a definition which includes a pandemic or a government lockdown situation, but really does it impact your obligations under the contract? Can you correlate the event to your obligation? So that's a requirement for you to make a force majeure claim. And finally, the fourth question is there anything that I could have done to prevent the impact? Because as I said in the beginning, that parties are expected to perform their obligations under the contract. The court would try and uphold the bargain, and therefore court would expect us to try our best to mitigate any force majeure impact that can be mitigated. As I said, it's possible that your force majeure definition may not have pandemic or epidemic included. So what we try to do is we try to broadly categorize the three broad sort of definitions that you will find in contracts, and then analyze each of them to see if even in the absence of a pandemic, epidemic, government action mentioned in your definition, can you really read into those clauses, these events? Can I have the next slide, please? So on one broad end of the spectrum, you have a definition which could be very widely worded, which is inclusive. It does not specify any events as such. I have the illustration. May I request everyone to just keep yourselves on mute? It will be easier for everybody to hear. Thank you. So the first one is a wide and inclusive definition. The example that I have for you is force majeure means any event, including acts of God or such other events beyond the reasonable control of and not attributable to the affected party. So very widely worded definition, and I think it's reasonably possible to make an argument that a pandemic, epidemic, government action, etc., would be included in this definition. The other end of the spectrum is a definition which is exhaustive, so it's all-encompassing. It leaves no room for interpretation. It specifically lists out the events. If you have this kind of definition, it's very difficult to make an argument that anything other than that the events that are listed will be covered. And really between these two extremes, we have the more common sort of definitions, which are wide and inclusive, but at the same time does list out certain specific events. And really what we've seen in such cases is the court will give effect to the definition really with reference to the events that are listed out. So just to give you an example, if your definition reads like this, force majeure am I audible?
Yeah, we lost you for a bit, Kingship, but now you are.
Yeah, sorry, I just got a message, so I was wondering. I don't know where you lost me, but I was referring to the exhaustive definition, and Neha, did we get that?
We did. We lost you for a very brief second.
Right. So between the two broad spectrums, about broad extremes, you have a definition which is somewhere in the middle and very common. A definition which is both inclusive, but at the same time lists out specific events. And as I said, in this kind of case, what we've seen is a court will give, will interpret the section, will interpret the provision really in the context by giving reference to the events that are listed out. So to give you an example, if your definition is something like this: force majeure means and includes lightning, earthquake, tempest, cyclone, flood, etc., and all other events beyond the reasonable control. And let's assume a tsunami or a terrorist attack impacts your performance. It is possible for the court to say that, look, a tsunami or a terrorist attack, though not expressly included, is relatable to the events that are included. So a flood is akin to a tsunami, a war is akin to a terrorist attack, maybe, and therefore they're included. But in events such as a pandemic, it's possible for the court to say that, look, it seems the parties never intended that a pandemic should be included. Having said that, I think in these unprecedented times, it remains to be seen how the court will really approach the situation. And I won't be surprised if
Kingshuk, we are not able to hear you at all. Kingshuk, uh, I think Tejas, am I audible?
Neha, yes, you're audible.
Okay. So I think maybe Kingshuk is having certain difficulties. Do you think we should move on to Harsh in that case and then come back to Kingshuk when he's on? I'll check with him offline. Sorry about that.
so. Sorry, I'm back. I'm back.
Oh, you're back. Okay. We lost you for quite a bit actually.
Sorry. Um, can we move to the next slide, please? So some other considerations when you're dealing with force majeure clauses: please look out for exclusion exemptions in your contract. Your event force majeure definition may really exclude certain events. Please look out for that. Similarly, certain obligations may be excluded or exempted. It's important that you see the contract, read the contract as a whole, and not limit the examination only to the force majeure definition and the force majeure clause. Similarly, what past obligations, a question that is often asked is, would a past obligation be covered under the force majeure event? Generally speaking, obligations that accrue prior to the occurrence of the force majeure event, it can be fairly argued that they are excluded, and force majeure events will really cover obligations, future obligations that are impacted. Having said that, we would have to be guided by the language of your contract. Lastly, commercial hardship or inconvenience is just not enough to trigger a force majeure clause. So let's be cautious when we are invoking a force majeure clause. If it is only commercially unviable, commercially difficult for us to perform, that by itself is not enough to invoke a force majeure clause. Next slide, please. So some good practices, it's important that you follow the procedure laid down in the contract when you're invoking force majeure. Please be specific. That's very important. We've had cases where we've received, clients have received force majeure clauses which simply state that, look, there is COVID-19, it's a pandemic, there is disruption and I can't perform. Now, you can't have that kind of a claim. If you're receiving that kind of a claim, it's fair, it's possible for you to say that, look, this is vague and I'm not accepting this. So please be specific when you're invoking a force majeure claim. Set out the event, set out the obligation, and also, if possible, refer to the provisions in the contract. That's very important. Most, I think, situations will get resolved. 99% of them should get resolved because really this is more hopefully a temporary setback and not a extended one. But in that one chance, outside chance that a matter gets into a litigation, your correspondence will become absolutely key and essential. So therefore, what you write today in your communication may ultimately determine the outcome of a litigation should it get to that. So please be cautious and careful as to what you put in the correspondence. Next. So as I said, if you don't have a force majeure clause in the contract, you may still have recourse to Section 56 of the Indian Contract Act. Having said that, the threshold, as I said, is extremely high. Section 56 can be invoked really when there is permanent impossibility. A temporary suspension, a temporary difficulty may not entitle you to invoke Section 56 of the Indian Contract Act. And that's really, I think, the key aspect of Section 56 that you need to bear in mind, that your impossibility must be permanent, because really the consequence of Section 56 invocation is that the contract comes to an end. That's vital for you to understand. Next. So consequences of invocation. Because if you're unsuccessful, you end up exposing yourself to a liability in the form of damages, in the form of an indemnity claim. And therefore, when you're invoking your force majeure clause or you're invoking the doctrine of frustration, let's be very cautious and careful, because the consequences shouldn't come back and hit you back. So that's important. Be wary of the consequences. Whereas if you're successful in invoking a force majeure clause, consequences will depend. If it's the force majeure clause invocation, consequences will really be dependent on the language of your contract. There could either be a delay, there could be a provision for deferment, or there could be a provision for termination. So consequences will depend on the language of the contract. However, if you're invoking Section 56, that is the doctrine of frustration, your consequence really is that the contract comes to an end. So that's the key difference between the two. And with that, I'm going to request Harsh to maybe deal with the real estate issues in this context, and I'm also happy to take questions after that.
Thanks, Kingshuk. Good morning, everyone. With respect to real estate contracts, we'll deal with commercial leases, licenses, and business conducting agreements. And as broadly Kingshuk mentioned, contract reigns supreme. So whatever is written in the contract would supersede anything else which any statute provides. So we'll first look at a situation where if the contract is silent, say a lease document is silent or a license agreement is silent, what happens? So in case of a lease, which is a lease deed, if the lease deed does not have a force majeure clause or does not envisage anything to do with frustration, then what happens is that you are not under Section 56 of the Indian Contract Act, but provisions of Section 108 of the Transfer of Property Act apply, and not the Contract Act. So that's a starking difference between all other contracts and a lease document. And therefore, if in your lease deed you do not have a force majeure clause, Section 108 only and only deals with a situation where the property is destroyed or damaged and nothing else. So it does not deal with the present situation where a lessee is unable to access premises or use its premises when the premise is absolutely fit to be used. So therefore, in a case of a lease, if there is no force majeure clause, there is no remedy available today under law where a lessee can go and as a matter of right seek a remission, waiver, or a moratorium on his lease. So therefore, ultimately, he would be left only with a request to the landlords to suggest that either you give a remission, waiver, or a moratorium. With respect to leave-in licenses and conducting agreement, as opposed to lease where Transfer of Property Act applies for leases, but in case of a leave-in license and business conducting, if the agreement is silent, then you will have to look at Section 56 of the Indian Contract Act. And as Kingshuk mentioned, the threshold of Section 56 is extremely high. It talks of such an impossibility which goes to the root or the crux of the agreement and makes it and renders it completely unviable or impossible to perform. Now, therefore, whether at least a 15, 20 or a 30-day inability to access premises is an impossibility to perform, the answer would be no. Because if you have a 3 or a 5-year term, a 1 month inability to access cannot be termed to be an impossible performance insofar as a license or the business conducting is concerned. Now we would come to what happens if the contract envisages force majeure. Now it is important to see what is envisaged under force majeure. it is very easy for people to see a clause on act of God and write a letter to a landlord and say that here there is an act of God and I am invoking force majeure. Now, unfortunately, today, as the Indian courts have interpreted act of God, the Indian courts have only looked at natural calamities or events which are beyond human control or anticipation. Now, a pandemic would not fit the bill today unless there is, because of this unprecedented event, the courts widen the scope. So therefore, it's important to see what is the consequence and what is covered under the force majeure. Now, if you look at the first illustration, there one would see the words epidemic, pandemic. But the epidemic, pandemic has to be read with the fact that the premises, the test is that the premises need to be demolished or destructed for this event to come into play. And therefore, even if the words pandemic, epidemic are included, you cannot invoke force majeure in the first case. Now, in the second case, you look at, there is no words of epidemic, pandemic, but it still has a wide encompassing language which has any event beyond control of parties. And if you are unable to use the premises for a continuous period of 15 days. Now, this is a clause which, even though you do not have a direct use of the words epidemic, pandemic, you can invoke because you have not been able to use premises for a continuous period of time and for reasons which are beyond your control. Therefore, it's critical to see what is envisaged. Going forward, it is also important to see what is the consequence, what is it that leads after force majeure. Is it suspension of payment of fees or is it leading to a direct termination? So if it's a direct termination, then as a matter of right, again, you cannot seek remission or a waiver. It's only a matter of request. So therefore, even a consequence, even if there's a force majeure clause which applies in the present COVID situation, it's important to see what are the consequences of such a thing. It's also important to understand that who are you? Either you are as a lessee or a landlord. If you are a lessee or a licensee, are you under the essential services? Are you under the essential services which the government has allowed and you voluntarily have chosen not to work? Now, if that is a situation, you cannot raise a force majeure because the landlord will come back to you saying that you are allowed. My office buildings, parks are working. Please come and occupy. Therefore, again, that is important to understand. MIDC has allowed in cases to defer payments of lease rent. So there is a start where government has started allowing you to delay payment of lease rental, but there is yet no case by the government to suggest a complete remission on lease payment or license fees for this period of COVID. It is also important to understand that financial incapability or inability to generate revenue cannot be a reason to not pay leases or license fees. Therefore, it is said judicial precedents are available to say that financial inability cannot be a reason to invoke force majeure. And the last thing which we'll cover besides the commercial contracts and leases, licenses, and we'll touch upon RERA, how RERA leads into force majeure. The RERA Acts provide a very stringent definition on force majeure, which is war, drought, flood, fire, cyclone, earthquake, or any natural calamity which affects the development. Now, pandemic in a RERA construct or in a construct besides the government who's come out on goods and services, where they've classified this as force majeure, that cannot be read into all other constructs. However, Maharashtra, Karnataka, and Tamil Nadu have come out with a circular extending the registration validity for a period of 3 months. Therefore, even for RERA projects, promoters would have to look back into their own agreements for each project to ascertain whether they have clauses in their agreement which allow them, for any reasons beyond their control, to seek an extension of handover delivery timelines. And if that's available, they should be forthcoming and writing to all allottees to inform them of this delay that may happen, because there'll be time which the developer would take to remobilize resources, migrant laborers, etc., going forward. And even insofar as how allottees are concerned, they cannot invoke force majeure in the sense that there is a recession impending, we are unable to pay, there is a job loss, etc., cannot be a reason to not pay up or renegotiate with any promoter. So this is all on real estate. I think we can move on to the next slide.
Thank you, Harsh, and thank you, Kingshuk, for that enlightening conversation on force majeure and real estate. We haven't been able to receive any questions from the participants. I would once again request you to kindly put it in the question box as and when you think of it, and you can and we will take them during the session. We will anyway at this point move on to employment laws, and if there are any questions on FM or real estate, we'll take them towards the end of our webinar. Would like to invite Anshu Prakash to kindly come up and talk about employment laws with the audience.
Thank you, Neha. So good morning, everyone, and pleasure to get connected. I think one of the most critical issues pertaining to workforce management in the COVID-19 backdrop. And from that perspective, a few points which I would cover, and I'll come straight to the point, bearing in mind the timelines which are currently involved. The first question which usually comes across in the COVID-19 backdrop is whether the advisories issued by the central government and the state governments in relation to reduction in wages or termination of employees are binding in law. So from that perspective, I would like to quickly explain that the 29th March Union Home Ministry order was specifically pertaining to migrant workers. Confusion was in terms of a particular paragraph which did lay stress on payment of wages and non-termination of workforce, including migrant workers. From that standpoint, I would take the premise wherein a unilateral action or arbitrary action on the part of the employer is something which should be frowned upon by the authorities. It will not be the case that if you agree or have an arrangement with the employees in question, it is going to be an immediate prosecution for you. So that is very quickly on the aspect of advisories versus the force of law, because the underlying intent of Disaster Management Act is to deal with issues pertaining to the current pandemic scenario, how to control it, how to prevent the outbreak. It cannot really tend to supplant the law, which specifically deals with employer-employee relationships. It cannot supplant the contractual stipulations which currently exist as far as your workforce is concerned. Moving over to the point of the entire perspective, when employees are unable to work from home, there are reduced work hours, and the overall perspective would be whether you can reduce the work hours and proportionately reduce the wages. When it comes to the workforce, which is unable to report to work due to the lockdown, it is unable to contribute to the business even working from home. Even in that scenario, it will not be possible for the company to unilaterally reduce the work hours and do proportionate reduction in wages. From that perspective, there are two aspects. One is from the perspective of Industrial Disputes Act, which will require you to issue an advance notice to the employees to reduce salaries. However, I would caution against immediately touching the core wage constituents. You need to rely on the contingent wage constituents or salary constituents, for example, shift allowance related to travel concession or any other reimbursement or capped allowances which are essentially dependent on fulfillment of certain requirements on the part of the employees. So the first and foremost bit would be to ensure that we are not paying anything which is directly connected with the activities the employees are required to perform, unless and until the case is that employees will be entitled to such payments in ordinary sense of the term. So irrespective of whether they fulfill those conditions or not, you continue to pay them that amount. So you need to be cautious of that fact. Contingent payment is that as a matter of practice, you first rely on submission of proofs, etc., or at least fulfillment of certain requirements as per the policy before those payments are disbursed in the next payroll cycle. In respect of termination in the lockdown situation during the extended lockdown, the suggestion would be you must try to avoid any redundancies which are completely oblivious of the fact that there is any disciplinary inquiry, any indiscipline which is currently faced from the employees front. I'll give a very quick example. If you are running into essential services, you are having continuous processes, you have taken all the steps to ensure that the employees are indeed reporting to work. And in those scenarios, if the employee has failed to report on duty, yes, it is very much possible you can take appropriate action. The first bit would be no work, no pay. The other aspect would be for continued abstinence from duties. As per your internal disciplinary policy, how do you define misconduct, etc. You can take appropriate action against such erring employees. But be sensitive, be empathic, because situation on paper and situation on ground are slightly different. Under certain circumstances, employees may be stopped. They are not able to move out. If at all their residential area is falling within a containment zone. So all these factors need to be borne in mind before you immediately shoot off a missive to the employees concerned who have failed to report on duty for reasons which can be attributable to them, and deduct salaries or initiate disciplinary actions. In respect of contact workers, the first question which would arise is, can I reduce headcount? Can I suspend the services? Am I really liable as a principal employer to pay wages to the contact workers during the lockdown period? Now, I would draw the inference from the applicable laws in this regard. For any period which is pertaining to reduced headcount, please be mindful of the fact that under the applicable law, unless and until you have a contractual stipulation which specifically obligates you to continue to pay minimum wages to the contact workforce engaged through outsourced agencies, you as a principal employer will not be liable to continue to pay wages for the period of non-deployment. Having said that, there are on-ground sensitivities involved. You may have the same set of contact workers who have been working in tandem with your regular employees. They have been there for a long time on your premises. In that case, you may look at or explore the option of having a discussion with the concerned contractor as to whether it could be a cost-sharing arrangement, because ultimately you're also looking at resuming ordinary duties, resuming normalcy once the lockdown situation is over at a later point in time. So from that perspective, if you want to conserve the workforce and you are largely dependent on the contact workers to prevent them from moving out, that could be an arrangement you can look at. From the perspective of any ongoing redundancy programs or performance appraisal related issues, please be mindful of the fact that unless and until one is clearly able to demonstrate in these circumstances that a person has failed to perform in the last 6 months or so, and it's not just about the last 2 months, be wary of the situation where you have doled out increment for a particular category of employees, and suddenly you tell them that there is a performance issue. The backdrop of COVID-19 will immediately get triggered from the perspective of terminating or letting the employees go. Another aspect I wanted to highlight very quickly is about layoff and retrenchment. Layoff is a statutory term that is temporary suspension of services. For manufacturing establishments, this is something which is possible. For your regular employees, you can invoke temporary suspension of service for a particular period of time under the Industrial Disputes Act if your establishment is completely shut down on account of an epidemic. That is a possibility, and layoff compensation is provided for under the Industrial Disputes Act. That law and that provision is not supplanted by any state government advisories or orders from the Union Home Ministry. Next slide, please. Quickly on the aspect of the question which would arise as to whether you can rescind offers to prospective candidates. The answer would be yes, you can rescind or defer the offers. The question would be what kind of communication has been set out for the concerned potential candidate. What does the offer letter prescribe in respect of date of commencement of employment? So if any change is there from the offer and acceptance standpoint for the potential candidate and the commencement date has not yet been triggered, we can arrive at a conclusion that there's no automatic liability which will accrue to you as a prospective employer. Be mindful of the notifications from various state governments, specifically Telangana and UP, which have specifically carved out special leave for those employees who have not been able to report to work on account of the lockdown situation. State of Telangana has specifically mentioned in a notification which emanates from Shops and Commercial Establishments Act, clearly stipulating that over and above the ordinary leave entitlements, you ought to have a special leave provision for the employees who have been unable to report to work until 31st March 2020. For symptomatic employees, it is important that you be mindful of the special leave provisions which are there in several states, including the state of Karnataka and Uttar Pradesh, which has carved out a special 28 leave period over and above which is ordinarily uh, uh, credited for the employees under the applicable laws and as a matter of policy. From the continuity perspective, be mindful of the fact that even if you resume the operations tomorrow based on the extended guidelines which have just been issued 2 days ago by the Union Home Ministry, you have to keep a track of the state government orders also. You have to rely on any stipulations which are there in limited orders set out by the district administration in relation to the standard operating procedures before you go full-fledged, provided you are falling within any of the categories set out in the extended guidelines from 20th April onwards. Last but not the least, you need to also revisit your extending policies pertaining to work from home, how the performance can be measured, issues pertaining to remote working, any issues in terms of technical grounds where employees are claiming difficulties in performing, whether you can take appropriate action in that regard, setting up hotlines, connection lines for the employees in these difficult and unprecedented circumstances will be equally important. Refrain from unilateral action, refrain from unclear communications, be connected with the workforce, empathize with them and make them understand from a human resource standpoint where you stand as an employer. And I think these unprecedented times can be sailed through if you want to retain your workforce or rely on the current legal provisions to deal with the difficult issues which may arise for you as the management in the COVID-19 backdrop. So that's it from my side on the employment law front.
Thank you very much, Anshul. I will just take a pause at this point and we'll quickly take questions both on force majeure and employment that we have now received. Kingshuk, are you there?
Yeah, I'm here.
Okay. So how do you want me to read out the question, or have you been able to glance through them?
So I've seen the questions.
Okay.
Do you want me to address all of them? There are quite a few.
Yeah, so maybe we could take the key ones that you have not addressed during your conversation, because I think there were a few that you already addressed, when you took the session. So why don't you kind of pick up the ones that were, not part of your presentation?
I think I can see one question from Santosh. It's a good question, and that seems to be the first one on force majeure. So if force majeure clauses provide that neither party is entitled for compensation, and then there are other clauses in the contract like change in law, suspension, which provide for compensation to contractor, what is the remedy available to the contractor as per Indian contract law? I think that's a very good question, and we've seen clauses like this in the past. So the general principle of contract law is that clauses of the contract which appear to be inconsistent or contradictory must be read to really give effect to those clauses. They must be read harmoniously, as they say, because the intent should be to give effect to both the clauses. And really, if you have clauses like this, it's perhaps possible, and one would have to look at the clause more closely, but it may be possible to make an argument that the latter clauses which specifically speak of, say, change in law or suspension and provide for compensation, those could be treated as exclusions or exemptions or exceptions to the force majeure clause. So that's perhaps one way to harmonize the two clauses. Then we have a question from Sonali. What if the party to whom force majeure notice is issued, the same party issues us a force majeure notice back? So I think then your problem is solved, because really both parties agree that there is a force majeure event, and the consequences in the contract will follow. And really there is no scope for a dispute in that case. So that's the best case scenario.
Yeah, Kinshuk, I think there's also a question which talks about essential services and organizations which are in essential services, can they also seek relief under FM, or is that not allowed?
So good, very good question. I mean, if you are within the essential services category, or if you're within the exempted category, it's difficult for you to seek shelter under the government lockdown or government order to say that, look, we are not able to perform, we are not able to carry on business, because really the answer, the response to that will be that, look, you're expressly allowed to continue. So it becomes that much more difficult for you to demonstrate force majeure impact or frustration impact. So that's good question. Difficult, but again, one would have to see the language of your contract to see if there is some out.
Okay. Then there is a question on non-payment to MSME under FM. Will that be considered as contrary to compliance, or under the MSME rules, or how does that one look into that?
So I think ultimately, if your force majeure clause is applicable, the contract really will operate, and the consequences in the contract will follow. I don't, to the best of my knowledge, there is no carve out specifically in this kind of a scenario under the MSME guidelines or regulations. But
Okay.
we can check and come back on that again if needed.
Okay. Then there was another interesting question, Kingshuk, which spoke about the fact that yes, we understand that this is the COVID time, and we can kind of claim of FM under this under the current umbrella. But there will be a time lag before businesses start getting back into action. And I think this is more from an insurance perspective, whether that period post we are post the COVID, once we are back into normal running, that period that people will take to get back into normal course of action, can they claim insurance, and can they claim any relief during that time if it is not specifically mentioned in their contracts?
So one would have to see again. I want to go back to my introductory comments that there must be a force majeure event, and it must impact the ability to perform. And really, if we are able to satisfy and reach, uh, satisfy these two tests, then I think one should be able to claim. But this seems to be really a scenario where there is some sort of financial hardship, there is some sort of inconvenience getting back to normalcy. And in first blush, seems difficult to make a claim, but one would have to look at the contract.
Do we I remember listening into another webinar that we conducted, where the example given was that of the terrorist attacks on the two hotels, Taj and Oberoi, where I think while they were able to claim insurance for the act per se and the loss that they incurred, then the time period that they spent renovating and loss of business during that time, I think was not really allowed under insurance. So is that a
That's right.
parallel comparison in this case?
That's a good comparison. That's a good comparison. Insurance would be slightly more specific and different, but yes, that is a good comparison.
Okay, okay. Would we'll now move on to a few questions on rent. Harsh, so somebody has asked that during this time, if somebody has gone bankrupt and is unable to pay, what is the recourse? And can they use? I mean, I don't know if they can use COVID as a reason, but how do you kind of view that? Harsh, are you there? Uh, Okay, I think maybe Harsh is having some issues. Let's move on to Anshul in that regard. Anshul, we had a question on employment. I think you have kind of addressed this in your conversation, but about this is regarding a senior professional who was offered a position with an organization in 2020, and he did accept and he resigned immediately thereafter. However, what has happened is towards the end of the notice, we are into this COVID situation, and now the employer has deferred the joining date until further notice. So now, given where the professional stands in these scenarios, what is the legal recourse, the professional is armed with? Not, I mean, we understand that the employer can rescind the offer and, delay and defer joining dates, but what does the employee per se have any recourse in this situation?
Good question, Neha. See, there is no specific recourse which is available under the labor laws, which will be available to the concerned prospective candidate. The only recourse he may have is to file a suit in the civil court for damages because he has already resigned and there was a reasonable expectation to join the services of the prospective employer. But there is nothing which is automatically getting triggered under the applicable labor laws for him to really claim a relief or at least seek retention of employment in the current circumstances. And it goes vice versa also. I'll cover that point very quickly, that whether he can take back the resignation, because that's another question. So in various Supreme Court judgments, it has been mentioned that once the resignation has been already tendered by an employee and accepted by an employer, it will be difficult unless and until the employer would also, exercise discretion and say that given the current circumstances, I would indeed allow the person to continue if he is willing to take back the resignation. So I'm talking from both the perspectives, but no immediate or automatic recourse which is available to an employee who is still prospective, who is yet to join or commence employment with a prospective employer.
Okay, thank you. Now, another interesting question is on Salesforce. So, the way it is obviously laid out in employment contracts, where people are paid basis the sales that they generate, and then today's time they are not able to do so. So, what can an employer do in this regard? How can the payment be deferred? Can fixed be deferred? I mean, obviously there may be an impact on the variable proportion that the Salesforce will not be able to, generate during this time. But what is the recourse that the employer has in this situation, and also the employee?
So I think it will be important to first look at the employment contract or specific policy considerations which may apply to the field staff or sales promotion employees, because a unilateral reduction is something which is ordinarily payable to these employees. It will be important to consider whether it is likely based on the number of sales or the kind of revenue which has been generated or the customer base which has been generated or expanded by the concerned employees while being on the field. I'm not very sure if it is about sales promotion employees who are specifically covered under the special law in place, or these could be somebody who could be deemed as commission agents who are completely whose employment or engagement will be completely dependent on a certain specific set of conditions to be complied with. In those scenarios, one can assess and arrive at a conclusion that communication needs to be sent out to those sales employees pertaining to the reduction in business or a complete pause on the business. And under these circumstances, if it is totally dependent on the number of activities which are required to be carried out, one can take a call that we are reducing it. But unilateral reduction simply by sending out a notice even to these employees must be avoided. So it needs to be really assessed from the contract and policy standpoint. No straightforward answer from a labor law perspective to this question.
Okay, thank you. The other question is that there is an advice by the Ministry of Labour circular from MHA under Disaster Act, and this is particularly in respect of educational institutions, Section 8 under Companies Act, which are constrained on the revenue front and internal, reserve to sustain. So while these organizations in such a way are actually in fact working, but how do you kind of then pay these guys, because there is no revenue that is getting generated? So is there a law under the Dispute Act kind of which addresses that?
So first of all, education institutions will not be immediately falling within the purview of Industrial Disputes Act. teachers will not be falling within the purview of Industrial Disputes Act. But to answer the first question about Disaster Management Act, please be mindful that I have already covered the point. It does not supplant the contractual stipulation if at all you are able to agree. See, the point will be cautious about immediately adopting an approach which will actually result in heads rolling or people moving out or exiting involuntarily. So you can first take an approach of looking at a reduced pay scenario with the consent of the employees, have an appropriate documentation in order given the time which we are facing today. And thereafter, looking at the rationalization perspectives, you can rationalize the workforce by following the process which is set out in the policy or as per the employment contract. But be mindful of the advisories which are there. Any kind of unilateral reduction in workforce ought to be avoided, especially in the educational sector or essential services sector, because that is something the government is also very sensitive about.
Okay. There is another interesting question where we spoke about how we could reduce wages in the given situation. So is it important that a written consent from the employee is taken that we are doing this and yes you are in agreement, or that is not needed at all?
No, as I mentioned, there are two ways to do it. Either we send a notice which is set out under the industrial disputes, and I'm talking about specifically the workmen category employees. For non-managerial and workmen category employees, you need to send an advance notice. That is the minimum requirement under the Industrial Disputes Act. If you want to forego that requirement, you need to take a specific consent from the employees. But I think the first step would be to take them into confidence, have appropriate documentation wherein you can look at certain aspects in relation to employees being given adequate opportunity to come back and seek any objections or reservations which they have on the proposal to reduce wages. Under those circumstances, it is possible for you to carry out and implement reduction in wages, but unilateral leave without pay reduction in wages ought to be avoided. It is against the law. It is not something which is permissible under the law.
Okay. And I know you did touch upon this, but for the benefit of the audience again, from an essential services perspective, if employees are refusing to come to work, where we all know that essential services are permitted to operate, but employees for some reason are not coming into work, then what is the recourse the employers have? Can they then either get them off, lay them off, employ somebody else? Can they reduce pay? How do they kind of deal with the situation?
So I have covered partly this point, but I would like to emphasize on the position of law here and how the judicial precedents have actually analyzed these scenarios. It will be deemed no work, no pay for an employee who fails to report to work for reasons attributable to him. But as an employer, you need to be mindful of the situations which could be there on ground. The point would be, if you have taken all necessary measures such as passes for the employees to commute, necessary conditions which are required to be fulfilled from personal hygiene, sanitation standpoint at your workplace, there is nothing which should prevent the employee from reporting to work. If he still fails to do it, you need to first send out a warning treating that particular day as leave without pay for the employee. But don't just take immediate action of removing him from that position and replacing him with somebody. Yes, on the day when he's not there, you can call in for a replacement. Employee who is not reporting to work under your instructions can be called in to report in lieu of the person who has failed to report to work. But yes, you can take appropriate action, but don't take termination as the first step for such employees who fail to report to duty. Leave without pay or no work, no pay as a principle can be applied in those cases.
Okay. Thank you very much. Before we move on to the next section, there's an interesting question for Kingshuk on FM again. Kingshuk, the question is that frustration, frustration being it's a statutory provision. So in that case, would force majeure clause in the contract mean that parties have waived their right to take recourse to Section 56?
Thanks, Neha. I think that's a very, very good question. And this is a common misunderstanding that a lot of people have. No, it's not really a waiver. And as I mentioned briefly ahead in the beginning, that doctrine of frustration under Section 56 for you to invoke has a very high threshold. It's as I said, you have to plead impossibility, almost permanent impossibility. A force majeure clause really parties would have in a contract to give themselves a sort of wider leeway, and also take the benefit of temporary suspensions or temporary sort of impact in performance. So that's really the distinction between the two. Having said that, what the Supreme Court has clarified is that if you do have a force majeure clause in your contract, and if on construction of that clause, the court comes to the conclusion that it applies to the facts and circumstances of your case, then it is not possible for you to invoke Section 56. So in that case, we either rise or fall with the force majeure clause. It's not a waiver, but at the same time, you can't invoke Section 56. But
Okay.
it's a good question. Yeah.
Okay. Thank you, Kingshuk. And I will apologize to the audience. Our speaker partner Harsh is unable to join back because of some technical issues. If he's able to join back towards the end on real estate, we'll take those questions. Else, we'll definitely write to you on email. With that, now I would request Siddharth to kindly please take his session on debt servicing. Thank you.
Thank you, Neha. Can we move on to the slide, please? Thank you, everyone. I'm Siddharth. I'm the banking partner at KCO, and I will try and quickly delve on the impact of COVID-19 like scenario on the rights of the stakeholders, especially in a contractual context, and certain key takeaways, and also give you a brief overview of RBI's recent relief package, giving the much needed relief to the stakeholders. And as we speak, half an hour or 45 minutes back, RBI's governor has come up with certain additional relief measures. So I'll just try to cover a few important ones because still, the reports are coming out. So moving on to the first part of the presentation, just quickly give you a perspective from a contractual framework that it is to be kept in mind by all the stakeholders, whether it's a lender or a borrower, that there is a rarity of force majeure clauses in the loan agreement. Loan agreement typically does not provide any relief from repayment obligations of the borrower on happening of a force majeure event. We have in our experience seen that such events are generally captured in the form of information covenants as opposed to reliefs. On the contrary, in some balance sheet funding transactions which we have done, these loan agreements give relief to the lenders from its funding obligations on happening of a force majeure event rather than giving relief to the borrower. So if anyone is looking to renege on their repayment obligations purely on account of force majeure event, it is slightly non-market. It's slightly unusual that you'll get that relief, unless of course RBI interferes and provides certain moratorium, which it has. Which leads us to the second issue, whether doctrine of frustration applies in context of loan agreements. My colleagues have already discussed that in detail. Just to give you the conclusion, it's highly unlikely that doctrine of frustration will apply in a loan agreement context, because you have to prove that the performance has become impossible. A mere difficulty by the borrower to repay will not entitle him to claim frustration, thereby excusing his obligation from repayment to the lenders. So that needs to be kept in mind. It's very difficult to prove frustration. So don't even go into the argument of let us claim frustration, let's renege on the obligation to repay. In fact, better is to write to the lenders and ask them to exercise their discretion in a reasonable manner, which is of course a part of certain key takeaways which I will deal with. There have been all is not lost. There have been certain instances, and in fact many instances, where courts have actually, in a COVID scenario, in a COVID era, given temporary relief to the borrowers. For instance, Bombay High Court recently, in a future group judgment, had granted temporary relief to from the pledge invocation. Also, in a Yes Bank case, the Delhi High Court granted temporary relief to the borrower from being classified as NPA. Most recently, if some of you may be aware, the Bombay High Court in Transcon Sky City versus ICICI Bank examined the question as to whether moratorium period is excluded in the computation of time period for NPA, and the court answered that in affirmative, said that moratorium period during which the lockdown subsists will not be considered for calculation of 90-day period for NPA declaration. So this is a very important decision, though it's an interim order, but this would be very handy especially for the borrowers who want to get relief. Now, this is very important now to bring in the aspect of RBI's governor's speech and certain additional relief measures which RBI has provided just half an hour back. And maybe in light of this judgment, RBI has just clarified that it has categorically stated that NPA classification will exclude the 3-month moratorium period. There have been other, so maybe because of this judgment, RBI has now made this very, very clear that the moratorium period will not be counted for NPA classification. There have been a couple of more, there have been many, but I'll just quickly tell you a couple of more measures which RBI has announced half an hour back. Is it plans to pump in more money in the banks through the TLTRO scheme. The liquidity coverage ratio of scheduled commercial banks has been brought down from 100% to 80%. So all these measures are being taken by the Reserve Bank of India to ensure that there's more liquidity in the system and banks can still do funding. And of course, we can have a separate session to tell you more what the RBI has said. We don't have time, and of course, we're still going through the RBI relief package, which just came back 30 minutes back. Moving on to the next point with respect to multiple breaches. The loan in context of a loan agreement and also in context of payment default, the COVID-19 like scenario should not only be looked at from a payment default perspective, but it would also cause multiple breaches. For instance, in the loan agreement, you have clauses pertaining to material adverse effect, abandonment of project, breach of underlying project documents, security in jeopardy, cessation of business. So the point is, a key takeaway here is when you're looking at your loan agreements, or when the stakeholders are looking at the loan agreements, they have to look at other provisions, other covenants which might be breached because of COVID, and not only payment default. Also, a related issue is cross default. Since corporates and borrowers also must keep in mind that COVID-19 like scenario may lead to cross default in other facilities. That is to say, any default, whether it's a payment default or not, may lead to cross default in some other facility taken by the borrower. The issue also gets further compounded in cases where facility has been provided by a foreign lender, since moratorium does not apply to the foreign lender, and such foreign lender may call an event to default under its facility. With respect to certain other measures other than RBI, which has been taken by the government, one is, of course, there has been the default threshold has been increased to INR 1 crore from INR 1 lakh for initiation of action by the lenders under the Insolvency and Bankruptcy Code. And also there's a likelihood of a 6-month suspension on initiation of IBC if the current situation subsists beyond 30th of April, and which from the way the lockdown has been extended, it looks like as of this will happen. A lot of other countries like Australia, Germany, Singapore have already suspended their insolvency laws. Countries like Switzerland have prepared draft legislation. So you might see an ordinance being passed where the IBC remedies are suspended, and lenders would be constrained from filing an application for initiation of IBC vis-a-vis the borrowers. So this brings us to the key takeaways which we have as far as part 1 is concerned. I mean, a note of caution for the borrowers: beware of certain clauses in the loan agreement which gives lenders the untrammeled right to cancel the facility. Typically, lenders have this clause in the loan agreement giving them unconditional right to cancel the commitment at any point in time. And we are seeing a couple of cases where this has happened, that lenders have refused to fund, saying that we have unqualified right to cancel it at any point in time for any reason whatsoever. So that needs to be kept in mind. Watch out for any trigger of a corporate guarantee or a personal guarantee pledge. Watch out for debt to equity conversion provisions, which typically trigger in context of event of default. We would suggest, especially to the borrowers, to renegotiate on-risk covenants, including asking for relaxation in timelines, ask for carve-outs for MAE or cross default, and most importantly, as Kingshuk had also mentioned earlier, inform the lenders on the hardship and business loss. Make sure you have correspondence in place. Request the lenders in that letter to exercise their discretion in a reasonable manner. That's very, very important. Make sure that you have a paper trail. Make sure you have correspondences so that if the lender is trying to or planning to take coercive action, you anyways have a justification that you tried your level best and kept the lender in loop. Just last point on the first part is that there have been certain emergency line which has also been opened by many public sector banks, for instance, SBI and PNB. It's called COVID-19 emergency credit line for the borrowers, which intends to funds up to around 200 crores depending on bank to bank till June 30th, 2020 with a particular attractive rate of interest. So those also can be availed. Moving on quickly to the second part of the presentation, which is RBI relief package. And I'm sure most of you would be aware of what the relief package is. And I have already sort of told you what RBI governor announced half an hour back with respect to certain additional relief package. But just to go back to the basic relief package, which was provided on March 27th, 2020, was basically rescheduling of payments for term loan and working capital facility. It granted a moratorium of 3 months on payment of installment, which includes principal plus interest for term loan and payment of interest for working capital facility, falling between March 1st, 2020 till May 31st, 2020. There has also been a moratorium on bullet repayment. Also, notably, that the interest will continue to accrue on the outstanding loan during the moratorium period. So it's not a waiver of interest, but the interest will have to be paid after the moratorium period ends. Now, a lot of clients and a lot of stakeholders have asked us whether this relief is mandatorily to be granted by all the banks. There's some bit of discussion on that. The RBI circular does not make it mandatory on the banks to provide these reliefs. However, from our knowledge, and we've been talking to a lot of senior bankers, most of the well-known banks are in the process of providing relief to the borrowers. And also there have been news reports that RBI is reaching out to the banks and telling them that it is mandatory, but no official communication from RBI has been made in this regard. Last 2 points with respect to other reliefs, and one major relief which has also been provided is relaxation in the classification of the borrower accounts as a special mention account or a non-performing asset. So the relief which has been provided is that any rescheduling of payments, which includes interest, will not qualify as restructuring owing to financial difficulty. And also any asset classification which is to be determined based on the revised due days and revised repayment schedules. So there would not be an automatic classification of a borrower's account as a special mention account if there's day one default. This relaxation has specifically been provided to address that concern. Further, the timelines for repatriation of export proceeds have also been relaxed to 15 months from the earlier time period of 9 months. And as a result of this relief package, the overdue payments post 1st of March 2020 will not be required to be reported to the credit bureaus for 3 months. SEBI has also allowed that credit rating agencies may not consider the delay as default by listed companies if the same is owing to lockdown conditions arising due to COVID-19. Which brings us to the last point, and again, a lot of stakeholders are asking this, that if we avail of the moratorium, would bank charge any penal interest during the moratorium period? The answer is in the FAQs given by the Indian Banking Association. It's not provided in the RBI relief package, that the banks will not be charging any penal interest in the accounts covered under the moratorium. So that's a short spiel on what the package and what the contractual obligations are, and happy to answer any questions which anyone has at the end of the presentation. Thank you.
Thank you very much, Siddharth, for that. At this point, we'll just allow the audience to take that in, and we'll give them a few minutes to get questions across to us. And in the interim, may I please request Abhimanyu to take on the next topic for the day?
Oh, thank you, Neha. So the next topic for the day is to essentially touch upon certain considerations for ongoing investment transactions and certain considerations for existing agreements that investors may have. And that's the first part of the presentation of my section. And the second bit is that we just touch upon some of the relaxations that we've been seeing coming in from both the MCA and SEBI in relation to listed companies going about their business. So firstly, in relation to ongoing transactions, and as you've heard in this presentation, that MAC clauses in transaction documents come in all shapes and sizes. And whether you can use the COVID-19 outbreak to trigger a MAC clause under a particular agreement will depend heavily on essentially 3 things. First, how the clause is drafted. Second, how the clause will be construed under the agreement's governing law. And thirdly, the actual impact on the business at hand. Under the present circumstances, the full effect or impact of the COVID-19 outbreak is not yet clear. And there are a lot of parties who believe that it may be too early to determine conclusively whether a MAC clause has actually been triggered. So from that perspective, for ongoing transactions, our advice would be to wait and watch and see how events unfold before you press the button. So at this point, our advice is that parties should closely monitor and maintain documentary records showing the impact of the outbreak on the business at issue in order to evaluate whether the situation threatens a MAC. One important thing to note is that courts are particularly sensitive to motive and are unlikely to favor a buyer's position if it is apparent that a buyer is simply suffering buyer's remorse in such cases. For existing agreements and for exit obligations, now there are a number of businesses in various sectors, as you know, which have been impacted by the COVID outbreak and which will require some form of emergency funding. So from an investor's perspective, if there are opportunities for such companies to avail of lower interest rates at this point in time, then by all means, if a conversation can be had with these companies in the investing companies to avail of cost-effective funding, then that should happen. And in certain investment agreements situations where PE investors can provide, or PE investors or other investors who can provide bridge financing, must consider that to enable the survival of their portfolio companies. The other thing that often comes to the forefront in these situations is that where the investors are holding convertibles and because of the impact of the COVID-19 outbreak on the business and impact on the valuation, the manner in which the convertibles will convert, the valuation, etc., will take an impact. And these are things that have to be discussed at the appropriate time with the relevant people in the investor companies. Similarly, put and call options will also have to be analyzed at this point in time. If those options are available, investors can consider what would be the appropriate time for exercise. Even when there are no provisions available, investors can have a discussion for agreeing to either purchase additional stakes in the company at lower valuations, so that they can achieve a particular IRR that they had contemplated. From an exit standpoint, of course, there is going to be a delay if it's an IPO process that the company was contemplating. It is unavoidable because quarantine measures will hinder due diligence and marketing efforts, and the market's appetite to inject a significant amount of equity capital markets at this point in time remains slow. So for the time being, exit, we are seeing private exits happen, but from a public market perspective, the situation is not conducive at this point. Our advice generally for investors and the portfolio companies is to continue to approach contract performance in good faith and maintain thoughtful and commercially reasonable communications with all counterparties at this point. From a listed company perspective, valuations are lower than what they were before the outbreak. So from that perspective, it is a potential time for hostile bids to be made. To that extent, the board should take careful steps when evaluating such situations. It is also the opportunity for promoters to consolidate their position through buybacks and creeping acquisitions as well. Of course, for buyback and creeping acquisitions, you'll have to follow the necessary regulations under the SEBI framework. And also for those companies which have been contemplating a delisting scenario, this also provides a good opportunity to consider such a move if that is applicable to you. Neha, can we move on to the next slide? This is so the next slide essentially touches upon certain relaxations that the government has given to both listed and unlisted companies to tide over the COVID-19 outbreak. From an MCA standpoint, the MCA has permitted EGMs through to all companies, either through video conference or through other audiovisual measures. This is a welcome relief given the situation that we're all currently facing. One of the important things, again, this is broken into two: for companies which are mandatorily required to provide e-voting and for companies which are not required to provide e-voting. Both can avail of the VC or OAVM facility. One important thing particularly for companies which are required to provide e-voting is that the appointment of proxies is not available for such meetings. Representatives can be appointed under the Companies Act for the purposes of voting, but no proxies are permitted. For those companies for who e-voting is not mandatory, the polling on the resolutions have to happen over email, and from that perspective, a designated email has to be sent by the company in advance. From a postal ballot perspective, one clarification that the MCA has provided, particularly for non-e-voting companies, is that polling through email can take place only during the meeting and not prior to the meeting. The other important aspect of relaxation that the government has provided is that the company's fresh start scheme and the LLP settlement scheme 2020. Again, this provides the companies and LLPs to take care of delayed filings at their without any penal measures. So from that perspective, if there are companies which have had delayed filings in the past, both these schemes are a good opportunity to cleanse past delays and essentially return to status quo. So we would encourage all companies and LLPs which have had a situation of delayed filings to use this opportunity to cleanse any delayed filings. The other important aspect again is Caro timelines have been extended to the next year. The new Caro rules would have been applicable from this financial year, which has now been pushed to the next financial year. The MC has also provided relaxation for independent director meetings for the last financial year. If you could not hold an independent director meeting as required under the Companies Act, that is fine as long as you hold it this year. That should be good enough to get you over that compliance requirement. The other important requirement in relation to one independent director having at least 182-day residency in India has also been relaxed. That is also not being stringently followed as required under the Companies Act. There are certain other things which are also important for companies which are now going to commence business, particularly in declarations for commencement of business. That has also been extended by 180 days. The government has also required companies to fill up a CAR form. It's essentially just a statement of affirmation that you are ready for COVID-19 related challenges. It's not a compulsory form, but a voluntary affirmation that needs to be made at your convenience. From a listed company standpoint, takeover code disclosures which are required to be made at the end of the financial year in terms of promoters, consolidated position, etc., has also now been extended to 1st June 2020. The new SOP, standard operating procedure protocols, which were supposed to go live, has also now been extended to 30th June. The earlier SOP circular will continue to apply till 30th June 2020. Again, advertisement publications, etc., newspapers has also been dispensed with at this time. As long as the stakeholders are informed, there is no requirement for to publish it through advertisements. From a materiality policy standpoint, under the SEBI LODR listing obligation regulations, it's critical that any material event which is a fallout of the COVID-19 outbreak which impacts your business must be reported to the exchanges, and we would advise that this be carefully followed at this point in time. From a CSR coverage expansion, as you know that there has been significant relaxation given by the government for usage of funds for COVID-19 related activities which promote healthcare, preventive healthcare and sanitation, and also as well as disaster management. The MC has also recently clarified that any contribution made to the PM CARES Fund, the State Disaster Management Authority, or ex gratia payments made to daily wage earners and temporary labor is eligible for CSR. What is not eligible for CSR essentially is contribution to the CM Relief Fund or the State Relief Fund. There's a debate going on around that right now, but at this point in time, funds which are contributed towards the CM Relief Fund or State Relief Fund is not eligible for CSR. And any kind of payment of regular wages during the lockdown period to employees or the daily wage earners is also not eligible for CSR. So with that, that's a quick roundup of the various relaxations that the government has provided to the businesses to tide over this outbreak. That's all from my end. Thank you.
Thank you. Thank you so much, Abhimanyu. What we'll do is, we've got Harsh back with us, and what we can now do is, before we close this session, I would just request Harsh to take up a few of the real estate related questions at this point. Harsh?
Yeah, sure. Thanks, Neha, and apologies for the technical glitch. So there are two questions really. One is on agreement for sale. If there is an agreement for sale, can you claim force majeure and avoid doing a contract or renegotiate terms? So to be honest, this would depend upon what the terms of the agreement for sale are, what conditions precedents were envisaged which were to be complied with before the sale, and whether those conditions precedent were such that time is of the essence as such. And if those conditions were not met within these timelines, which COVID has hit, and it would not be of any use now to go and do the transaction. So therefore, that is important to ascertain whether the conditions which are attached, which require to be met with, were they as critical to be performed within this timeline or not. And only that would, that would answer whether you can use force majeure or not, and whether force majeure at all was contemplated in the agreement for sale. The second question is on rent, whether you can avoid payment on rent because people have not been able to use their offices from 15th March to 3rd of May. As we mentioned, so if you'll have to look at the agreement, if your agreement has a wide encompassing clause or envisages business disruption or inability to use premises, then yes, you would be able to claim force majeure. But if your agreement do not contemplate disruption or inability to use premises, but only covers act of God, etc., which leads to damage, destruction, then unfortunately this event cannot be classified as a force majeure and be taken recourse to.
Great. Thank you, Harsh, for that. I'm conscious of time, and I will pose one question for Siddharth before we conclude the session. Everybody's questions that have not been answered, please don't worry. All unique questions which have either not been addressed during the presentation or answered during the question and answer session, we will send out responses to Ms. Iyer, and she could then send it onwards. So Siddharth, having said that, one question for you: where failure to meet mandatory financial covenants agreed with the bank due to the COVID situation, in this case, whether this can be legally challenged. So normally banks charge penal interest for breach of agreement, breach of any agreed covenant. So in the COVID situation, is there a worry on the same grounds?
Yeah, so if you see that in the FAQs, it has been specified that if any of the borrower has availed of the moratorium, the penal, there would not be any penal interest which may be charged. Now, whether that penal interest is being charged for X reason or Y reason doesn't matter. So legally, in light of the FAQs, if a bank is charging a penal interest because of a breach of a covenant, then that can be challenged, or at least we would recommend that the borrower may write back to the bank saying that you cannot charge penal interest during this period, and quote the FAQs.
Okay.
So one can push back.
Great. I think that was covered well and in positive light. With that, I think we will close today's session because we've already reached the 12 o'clock mark. Before we end, there would be a short poll that will now appear on your screen, and would request if you could kindly quickly give us a feedback on the same. Tejas, could you please show us the poll? Yeah. So with that, we really thank you for your time this morning, and we really hope that you found this session insightful. Please feel free to reach out to us in case of any further support that you may need on any legal and regulatory related matters or interpretations. And with that, I would kindly request Ms. Iyer to please close the session for us. Thank you, Ms. Rashmi. Ma'am, if you could just unmute yourself, we can't hear you.
Okay. Is it okay?
Yeah.
Neha, can you hear me?
Yes.
Okay.
Yes.
Okay. On behalf of Global, I wish to thank each and every one of our clients and our friends, and most importantly, the team from Khaitan and Co. for giving us such incisive legal perspectives and opinions and views on the issues facing us in these extraordinary times. Well, today's session was absolutely to get the legal perspective. I just want to quickly announce what Global has in store. So we have two sessions coming up on April 22nd, which is Wednesday. we are going to study, or we are going to discuss rather, the impact of current situation on insurance policies, because hitherto in today's session we have not touched on the insurance. So this is going to be a dedicated session on analyzing and discussing the impact of current situation on insurance policies, where there will be product experts who will be discussing the nuts and bolts on this topic. That's on April 22nd, Wednesday. We will extend you an invite. And the second one, which we have on 27th April, Monday, which is cybersecurity risks should be one's foremost priority. This is the other one, which is on 27th April. And one last bit, there was a mention, Neha, you made from your takeaway from some other seminar, that there was these 2611 and the two hotels, they had suffered losses. Well, the difference is that between the two hotels, one had a business interruption extension to the policy and the second one did not have. So the one which had the cover, which is called the business interruption consequent upon a material damage loss at that particular hotel, and incidentally we were and we are the consultants and brokers for that group till date. So the claim was very satisfactorily settled. So while there are nuances, but basically you should have availed of the right insurance cover. So having availed of the right insurance cover, then the second step is that how do you get the claim and navigate through it. So the one hotel which had taken the business interruption policy did get compensated, including for the entire almost 1 year when the hotel was shut down for major renovation and repairs and reconstruction. And it was the first claim of its kind in the country. There was not even a surveyor who was available in the country to give a survey report and to come with the calculation of the claim or because of this business interruption. And a specialist had to be flown in all the way from Australia, which also the expense was finally reimbursed in the insurance claim. So it is possible, but again, it's a question of the foresight and how much you think of insurance when you are actually signing the contracts. You all might have seen last week in the papers that the Wimbledon tennis championship, which has got now cancelled, for 17 years, 17 years, Wimbledon has been buying their insurance for conducting this event, including the risk of pandemics. 17 years non-stop, and touch wood, there was no claim at all. And this year, the cancellation has happened due to pandemic, and they stand to get more than 400 million pounds as a compensation. So this is what my last bit, and see you again at our future events. Thank you very much for joining. Thank you.
Thank you, Ms. Rashmi, for providing us with this opportunity. We will now end this session formally. After we close our session, you will find one more survey to take. So would request all the participants to kindly take that. And with that, thank you very much again for your time. Stay safe and stay connected.